Hey everyone, welcome to another episode of Blockchain Banter, Trading Crypto. Mark, my connection was a little bit iffy yesterday. Am I spotty today?
Seems okay right now.
Okay, perfect. So welcome everyone. Keith, Mark, thank you guys for joining me up here. Thank you to all of the listeners. Crypto Corio won't be able to make it today. He is hoping that he'll be back next week, depending on his internet connection. So we have Keith Allen here with us today, who is the co-founder of Material Indicators and Algo Trader, Order Book Analyst, and Mark Richardson, who is our project lead at Bancor and CarbonDeFi. Welcome, guys. Thank you again for joining me.
Thanks for having me. As always, I enjoy this. Sorry, Crypto Corio isn't here. I always enjoy picking up nuggets of information from him.
Did you see my 25K BTC call from last week, Keith? Basically came within just a hair of making it.
Yeah, we. I think we're pretty timely last week with what happened, and I'm gonna say right now. I said on that show that I didn't see enough liquidity below 27 to make me think it was going to happen yet. And I was clearly wrong. But the book is so thin. I think a lot of people were taken off guard by the move. I think most of us expected that move to come at some point. But remember we said in the show that we were all saying that we didn't think it was quite there yet, and I said it happens when we least expect it, and of course that's exactly what happened.
We also said that you were waiting for like this 20K mark. Are you guys still thinking that same target, or what are we seeing this week?
Well, I think that I say frequently that there's no straight lines, and I feel the same way. That's a fact. There are no sustainable straight lines. So I'm expecting a little bit of movement north from where we at, but we've been so flat. It's really hard to know. I think when I see price action stall out like this, and we are crabbing as bad as we've ever crabbed, and I think what happens is a wall is set to suppress price, and I think what the market is doing, or market makers are doing, is trying to see where the sentiment is. Where is liquidity going to come in, or is ask liquidity going to come in? And inevitably people get impatient, and that's when you start seeing the liquidity start to move around. We're seeing very small incremental movements. I posted something this morning about some of the incremental movements that were coming up from the 20K range into the 21 to 25K range, but not really, not a lot, number one, and number two, not a lot happening above that 25K mark. And depending on what exchange you're on, the lower low is very close from here. On Coinbase, it's like 24,750 would be a lower low. So if we have an overshoot that pierces that level, you know how the psyops work in this game. We often see an overshoot, but I think if that gets pierced, we break down towards 20 sooner than later. And if that gets pierced, and I highlighted where those lower lows on, I marked up a fire chart this morning, Jen, if you want to grab it, that shows where the nearest lower low is, which is right at the 24,750 mark, and then a second lower low from there would be just below the 2017 bull market top, which is just sub 20K, and then things get interesting from there.
Mark, you're unmuted, but I can't hear you. Are you speaking?
Oh no, sorry. I didn't realize I'd taken myself off of mute. But yeah, I'd be interested to see what the liquidity is. I'm having a look at just the Binance chart right now, and it still looks pretty indecisive, honestly. But yeah, I think it's still leaning bearish. It could we might see a little bit of a relief rally, but my bias is still down to at least the 20K levels at this stage. There's still a lot of confluence around that area.
I'm right there with you. And if you look at the key moving averages as well on the weekly, we're hovering in that range too. So there's a lot of things that point towards an extension of the downtrend, but I think right now the market is waiting for a retest of the low, being 25K, and a potential double bottom if we get it. If we get it anywhere between 25 5, I think we overshot 25, like 24.4, 25.4 something the other day, down to the 25K range. As long as that lower low isn't printed, we could see a nice short-term bounce to lure some more people into the market. And then, how the game is played, right? When they lure them in, they trap late longs and early short. It's like, squeeze some shorts, trap some longs, and then repeat. So if we do pierce that level, if we do print a lower low, then I think we get to 20K faster. And, from there, there's at the moment, there's very little in the books. And just like we were looking at a week ago, there was very little there was next to nothing in the books at this level. And as price moved into this range, obviously liquidity, comes into that into the range. And no doubt we'll see the same thing as price, moves in either direction. I will say two interesting things. One that I noticed this week is our old pal CZ, who likes to telegraph cryptic messages to just, fire his shot across the bow. Posted something that said, if you sold below 10K, you're kicking yourself. So to me, he's telegraphing that he doesn't see the market going below 10K. Maybe he's the one that's controlling that on Binance. We have no proof of that, but everybody's got their assumptions. And I will say that there has been long-standing liquidity at the 12K range. There's been at points I've seen this wall as high as 72 million. But for over a year, it's been 55 million stacked at 12K. And I posted something about that on X the other day. And somebody said, well, that's 55 million is nothing. What people need to realize is these values and these volumes are relative to what is in the order book and what we have seen historically in the order book. And 55 million is certainly not the most that we've seen in the order book stacked. The big bull market moves, the big bull market kickoffs are typically 75 upward to 100 million at one level with bid liquidity stacked below it. So there's depth to it. This 55 million is the largest thing in the order book by a long shot right now. So it's relative. Is it a massive amount of money? No. Is it significant because it's the largest thing in the order book? In my opinion, it is. And there's a lot of technical reasons that could point to that level.
Sorry, Mark, going to add to it too.
Yeah, what I'm paying attention to just recently on the Bitcoin chart, I've been having a look at much longer time frames in terms of the moving averages. And so the one that I'm looking at right now is comparing the 21 weekly EMA and SMA to the 100 weekly EMA and SMA. And we really haven't been below the 100 weekly on either the EMA or the SMA. So the first time in sort of recent memory was when we had that brief capitulation down to 3,000 right at the beginning of the pandemic. Remember when the markets went crazy for a few weeks. And then that kind of, in a way, was the beginning of Bitcoin's bull market run. and it basically moved. It's been above it for a really long time. We held the 100 weekly EMA as support back in sort of January in 2022. And then when the 100 EMA and SMA sort of converged in May of 2022 is when we actually broke through that support level, and we've been under it essentially ever since. We actually held the 100 weekly EMA as support on Bitcoin from sort of March onwards. We kind of broke down below it, but only for a few weeks, and then we were back above it again. But notably, we've been sort of drifting closer and closer to the 100 SMA.
Wait,
And
Mark,
this is
Mark,
kind of
Mark, just a point of clarification. You're saying the 100. Are you mean the 200 or the 100? The 200.
comparing the 21 weekly and the 100 weekly EMAs and SMAs.
Okay,
But
so
yeah,
the 21 weekly SMA has been support for since we kicked off this rally in January,
correct.
and the 100 weekly has been resistance. In fact, that's what I've been calling for to see to consider a breakout. The
Right.
200 weekly has been up until this bear market began, has been really strong historical support, and I think what you're referring to here has been the 200 that we cracked back above briefly, retested, and we just fell through again.
Right. Yeah. And we're basically below all of these moving averages right now, which is suggesting a trend reversal. And so, yeah, I think it remains to be seen. I do think that we could drift, like if we do get a relief rally, I think this previous support band could start serving as resistance. And from here, it's still not looking too bad. We could, it's possible that we could rally back up, as high as like 31, maybe a hair higher. But I think that there's going to be a lot of resistance when we get up there. But yeah, to the downside, I'm looking at where is the most confluence, and really, just north of 20K is looking pretty good. I doubt that we'll see prices as low as like 15.5 again, which is kind of the local bottom here.
Right.
But I think into that 20K range is looking pretty good. It's almost, I can see the chart sort of almost gravitating towards that range now, like a magnet.
So the 20K range is both technical and psychological, right? That was a big barrier for anybody that was in the market back in the day when we first went to that level. That was a big barrier. If you look at the the history, the 2017 top was pretty much that level, 19.6 something, 19.8 something, depending on your exchange. It was just sub 20K. And I've heard a lot of people talk about 13.8, which was the 2019 top. And I actually, when this bear market first began, had a target there at 13.8. In fact, I still do. It's kind of a dream target. I don't know that we ever go there. Like you said, 15.5 seemed pretty strong after the FTX crash. I actually scooped up a few sats there, sold most of them as a scalp, and then held back some. Only wish that hindsight, which you can never trade. I wish I had held more from that level, but I do. That's really where I started building my position from. So as for that 12K level, I've been in a couple discussions with people on social media about that level, and here's why I think it could be a viable target. We spent 13.8 was the 2019 top, 13.880. However, we spent 2.5 years trying to break past 12K. literally it was a resistance support line for over 2.5 years. So there's a lot of confluence on the chart for that level too. So should, in the event that 20K doesn't hold, right? So that would be a second lower low. If there's a second lower low, then, we're looking at the teens. And, that's when I, again, look to the order book to see where the concentration, where the liquidity is moving to. At the moment, there is a buy wall at 12K, protecting it from going to the 10K that CZ alluded to. And who knows, maybe that's CZ's 55 million stack there. I have no way of proving that, but you never know. You never know who owns that coin. So I don't think we can rule anything out, is what I'm saying here. We can speculate. Hey, 20K looks good, and it does, and I'm sure. I have confidence, anyways. Nothing is guaranteed. I have confidence that if we do go to that level, there will be at least a bounce before any further deterioration, and we would have to see what where liquidity moves at that point, see what other forces are influencing the market to determine whether there's a high probability of going lower at that point. What we see in the charts today does not factor in what other economic or geopolitical events are happening around the world that could influence price action at that time. And I can tell you that the U.S. economy, we hear all this stuff about how strong the economy is. I think people are about to start hurting.
Keith, really quick, you said that 20K was, what did you call it, a psychological barrier and technical barrier?
Yes.
Right. Do you often see, or how often do you see that there's the two? Like, when you see the psychological barrier, is it generally technical also?
Well, they've become that way after consolidation in those levels, right? So to me, the kind of like the milestone numbers, 20K. I mean, let's roll it back years. Breaking 10K was a big deal. Breaking 20K was a difficult deal. 25K we had before we broke down here. If you remember, on the way up, there was quite a bit of battling over the 24, 25K line before we actually cleared that level. So, when you get into, it's almost like the tens, right? 30K will be a psychological barrier because we've had so much trading on that line, consolidation along that line. It develops into a technical level. So, 50K psychological. Is there a ton of consolidation around 50K? Not comparatively. There's some above and below the line, I guess. Let me look really quick. No, not really. There was for support, but not like some other levels. Breaking 60K was huge, right? So there's a lot of toppiness around 58, 55. 60K was a psychological barrier. There wasn't much time spent trying to break it. So at the moment, the all-time high remains the technical barrier at that level. But there's no consolidation or confluence around it because there's only, we only spent a day there.
And you mentioned the U.S. economy, like outside influences, that we haven't quite presented themselves yet affecting the market. How big an effect do you think that might be? I mean, we've seen all sorts of news over the last, 3 or 4 alone that really haven't had a huge impact on the market, but you think that the U.S. economy could be something different?
Well, I don't know about you. My kids went back to school this week or last week. And I feel like every day all I've done is spend money on school clothes and school supplies and uniforms and PTA, and there's a dance competition coming up we got to get registered for, and hey, the other one's playing volleyball. So that's household money, right? That's middle class household income, discretionary income that is no longer discretionary. You're spending it on the stuff you need for your family. So I think that resonates with a lot of people. How long will it take to filter into the market? We're starting to see the news how, savings, people, money that people stockpiled, savings from COVID, is going to start to evaporate. Well, credit cards are, at highs for a lot of people, at least industry wide. We're seeing that, credit card debt is skyrocketing. Well, this all doesn't lead to a positive outlook.
Mark, do you agree? What are your thoughts on that? I'm curious.
Yeah, remains to be seen. Sometimes I think I mentioned this on our last call, that sometimes it can be pretty unpredictable. There are a whole bunch of examples that people often point to where the economic facts seem to completely stand in the face of what markets do. It's a well-established phenomenon that what should make economic sense often has the reverse impact in markets, at least in the short term. Of course, in longer time periods, we will see those kinds of things balance out. But yeah, it's worth paying attention to, but it can be very difficult to trade. So, like, for example, sometimes when there's a sudden interest rate hike, the correct thing for the markets to do is to retrace, and they often don't. And the same is also true in reverse. So it's not it can't be used it's not causal, at least immediately. But yeah, we'll wait and see.
Well, I think a key phrase you just said there is not immediately. It's a lag. It's a lag effect.
Right. Exactly.
A lot of us expected the market, as rate hikes were going up and we started hearing about the economy, we expected the market to pull back, and it hasn't. And the market has continued to defy a lot of, to me anyways, it defied logic that the market was going up the way that it did while inflation was, in the situation that we had. The macroeconomic situation is what it is. And now maybe these things are starting to catch up. They always say that real estate and unemployment are the last things to break. And real estate has started to come down in a lot of markets. I'm in an outlier market in Miami. I will tell you that I have 2 houses on my street for sale right now. One is pending. They're up 45% from the 2 that sold on our street last year. 45% in less than 18 months. That's
insane. It is insane. The real estate one is actually the one that bothers me a lot. I think that these are very strong. What do they call them? Like counter, or like reverse indicators.
Right.
When you see something kind of looking really bubbly like that, it can it should make you feel very bearish.
Right. But Miami is an outlier market, and I don't think that the rest of the country is on pace for like we are here. I think it's already started to come down in a lot of places. And the unemployment situation, it seems like unemployment has been unbreakable. The Fed's been looking for that. And we're starting to question whether the data, every time they put out data, a month later they send an adjusted version of that number. I feel like we might be getting played a little bit on what the unemployment numbers really are. Of course, it's political season, and I think that the White House is trying to play that in their favor. We'll see. Time will tell.
Keith, you posted about ETH. We don't speak about ETH very often, Ethereum. We generally speak about Bitcoin. I want to pin what you tweeted, was this yesterday,
Right.
on the ETH chart. And we generally speak about the fire charts also, but this is the indicators here.
Yeah. I will say this, that I am notoriously bad at making ETH calls. So I don't trade it a whole lot. I know there is a lot of sentiment for ETH, but I just look at it technically. I look at it from technical aspects of it. I've got some fundamental issues with the lack of decentralization at ETH. I think that it has potential to be something phenomenal because of the utility it provides for so many other platforms and projects. But I look really strictly at the technicals of where ETH is right now. And yes, we do have a down signal on trend precognition on the daily. And well, we printed one on the monthly a few months ago. So these signals are technically really reflecting what you see in that time frame for that candle. So, technically, the signal was for the adjacent candle, and we've had a continuation of that downtrend since then. So we had our last monthly short signal on ETH back in April, and so the downtrend has continued. We on this dump this week or last week, whenever this happened, it bounced from the 50-month moving average. Almost went right to it. The trend line is slightly below that. So, Mark, I don't know what your thoughts of where you think ETH might land, or if you think it's bottomed. I'd love to see it. I'd love to see it personally. I'd love to see it break through the trend line and go back to some historical lows and consider maybe picking it up a little bit down there.
Yeah, I think that the Ethereum chart, it doesn't look as, I'm a bit indecisive about it. We're still under the 21 EMA SMA, so like its situation kind of looks similar to Bitcoin's. I think that it's possible that we'll be revisiting sort of the last support level we had, which was at like 14-ish, right? I'm just looking at the bottom of these candles back in February.
Yeah, and
I think that would be like, I wouldn't expect ETH to break too much lower than that. But if you have a look at, Jen, did you pin the tweet from NapGeno?
Right now that you mentioned it, everybody, I'll pin a new tweet up to the top that Mark is going to speak about for a minute.
This really amazing comparison between the Ethereum price and BlackBerry stock. It's the charts are basically verbatim identical.
How is that possible?
Yeah, I know, right? It's amazing.
Are we in the Truman Show? Is somebody just pulling strings on all of us for the last?
Exactly. And so be aware that the source of this tweet is a very controversial individual who's, his whole identity is basically now focused on being bearish in the most dramatic possible way. But things like he's so good at it, right? Like these kinds of comparisons, they do give you pause.
Right.
So yeah, I would say that the most bearish I think you can be on ETH is that we're returning to the $200 level sometime in the next year or so. But I don't buy it. I don't think that this is going to happen. My personal inclinations are we'll probably stabilize around that 1400 level, and we'll probably crab sideways for a while. And let's talk about it when we get there.
There's some confluence on that 1400 level and the trend line of support right about now. Interestingly, on the weekly chart, the 50 SMA and the 200 weekly have crossed. So that's death cross scenario. And as we speak, in the last 30 seconds, we have touched the we might be going back to it. We're testing the 200 right now as we speak for support.
Well, let's see. That's exciting. Let's see.
Right. You're gonna get a live call whether it lives or dies, like Caesar. So the interestingly, now that they've crossed, the 200 is at 1631, and the 50 week is at 1613. So we're very close to each other. You would think that both of those indicators stacked on top of each other like that would be, the confluence would be enough technical support to hold it up. But a wick down to that 1400 would be phenomenal. People would go crazy. I think you'd see some buying from there, and maybe that's what we need, is a flush to trigger a rally.
Yeah, I share that opinion. I do think that there needs to be something dramatic to the downside, right? Like we did see the people react sentiment change when we saw the market start to dive last week. But I don't think it was enough. There needs to be something that puts the fear back in the market.
So one of the things that happened last week, before we made that flush down to 25, and also part of the reason that I didn't think we were ready to go there yet, is of the trend precognition indicators. We have a couple of different algos, and one of them that you see at the bottom of my chart, which is marked with dots. So the A2 plus algo is the one with arrows on the main chart, and then at the bottom there's one with red and green dots, and a line that is the A1 slope line. The A1 slope line is predictive. It moves in real time, similarly to how an RSI moves. And at the time, even though it was leveling off a bit, the A1 slope line was still trending up, and close to trending up to where it would fire a signal. And it reverted hard before it got to that center line where it triggers a signal. So it went to a quick downtrend, and we saw that dump. And now on the ETH chart, I'm seeing kind of a V-shaped, a mild V, I might say. We'll call it a wide gradient V, where momentum, and that's a momentum indicator. Okay, so it's trending, that it's signaling that momentum is starting to build from where it was. Okay, so we had bottomed last week on ETH. I'm looking at the ETH chart. It was at 1550, and it's saying that momentum is starting to build. Now, that doesn't mean that price can't go down. It just means that that the downward momentum has faded and starting to gain some strength, which is why we saw a little bounce. We're testing support at the moment, still at 1630. So we'll see what happens there. On the Bitcoin chart, same set of circumstances. However, it has been up and down in a chevron pattern here, almost a W here, for the past few weeks. So, when it does this, it's kind of an indication that the market's indecisive and it's trying to sort it out. So that's why you've got to look at all of the tools that you can, and data that you can, to make your assumptions, right? So I don't go just on what this is telling me. I'm looking at the liquidity in the chart, in the order book. I'm looking at the key moving averages and trying to kind of paint my own narrative off of that. And what I see is chop, chop, chop at the moment, waiting to see if more liquidity comes into the order book, closer to the range, right? So I'm starting to see little bits, price is degrading right now, and little pieces of liquidity are starting to float up closer to the price range, closer to the 25.5 range from down below. Not a lot. It's not significant to the point where you go, okay, that's going to be enough to get us there. But that's what I look for to get a baseline on whether I think we're about to make a move, right? I haven't seen enough of what I want to see to make that happen yet. But this is how it happens. Traders get impatient. They start front running what's there. And when enough of it happens, that's when you get a move. To the contrary, it can start breaking down and go the other way.
We also spoke about, I think last week, when people are sort of looking for alternative, like trading opportunities. Do you remember?
Yeah.
When, people are like, the BTC isn't giving them the volatility that they need, so they start looking for other options. It's interesting to see that kind of also starting to play out since our last call. because like XRP, the ugly duckling, right, of crypto, has actually held up remarkably well, right? It hasn't actually, it's still holding its EMAs as support, and it's got a rising, it's got a rising support band. And so I actually do, like, I'm looking at these things, looking at how some of the other, major crypto projects behave, like, Litecoin, in terms of sort of the digital silver narrative or whatever. It's basically behaving exactly the same. We're not seeing anything too difficult. ETH is the same, Bitcoin's the same. But XRP, it wicked down, but it caught back up, and it's looking a lot healthier compared to some of these other, some of the mainstays of cryptocurrency. And so I think that this is exactly the phenomenon that we were discussing, which is, people have basically turned to to more volatile assets. XRP had a local at about at almost 0.9 just a few weeks ago, and is now down at 50, but still hasn't broken market structure, which is interesting. I think that we often see these. When Bitcoin is boring or bearish, but not catastrophically so, things like XRP and Litecoin tend to pick up, and the XRP chart is really interesting right now.
Yeah, and it obviously it got a big boost from the SEC announcement after that case, and listen, it had a there was 100% candle that day on that news.
Right.
I mean, literally just it's unbelievable. And of course, those aren't sustainable, right? So that's why we've seen the pullback. But you would think that this should ultimately appreciate in price based on that news. Now,
right.
In terms of what people are looking for right now, this is interesting, and this is another reason I wish Crypto Corio was on the call, because I'd love to know what people are focusing on, what narratives people are focusing on. He's a narrative trader, and he documents a lot of that stuff. So that there's a lot of insight to be gained from that. I personally, being a super conservative trader and gravitating largely to Bitcoin, I would be looking for the the larger caps like this. I'm not really a fan of XRP, but I do hold some based on after that that news announcement. I did get some.
You don't have to like the coin to trade it, right?
Right. Exactly. So if there's an opportunity there, then obviously play it. So what I'd be interested to know is, are we seeing more people gravitate towards these coins that that have some history, like the XRPs and the Litecoin and Cardano, the larger caps? Historically, the small caps have been the most volatile, and so that's where the crypto bros tend to go.
I pinned his narratives Dune dashboard to the top. Crypto Corio is data scientist and narratives trader who generally, for anybody who hasn't attended our call previously, who is one of our weekly panelists but unable to make it today. He has created a couple of Dune dashboards. The one that I pinned to the top is his narratives Dune dashboard. So it shows the amount of volume, trading volume that they're doing, the amount of traction that these different narratives have, kind of the lifespan of them. I have seen him recently speaking about the social fi sort of narrative that we had been speaking about, the friend tech and the amount of trading volume that that's doing at the moment. That's kind of the narrative of the moment.
Well, the volume, I'm just looking at coin market cap, and volume on the large caps is still heavily, still pretty predictable. The heavy favorites are still the ones that are trading the most. Mark, I don't know if you saw the news today that Coinbase is taking a stake in Circle.
I always, I always expected that. I once was convinced that they were the same company.
I thought they were. I initially thought that they were, and or thought that they at least had a controlling interest in it. And it sounds like that wasn't exactly the case. I personally have been scared of unstable, what I've dubbed unstable coins for a while. I've never trusted USDT. You know, I was trading it when I was over on Binance, but once I repatriated my funds to the U.S. and trading on U.S. exchanges that I'm on, the volume on USD fiat was better, so, and safer and FDIC insured. So so I park in fiat instead at the point, you know, at the moment. I know a lot of crypto maxis don't like that, but I've had I had a signal in the past several months on, I think it was I think it was I think it was USDC on a mean reversion indicator that we have, and this was on Binance US. I got stopped out of a fucking stable coin. Okay. And not only did I get stopped out of it, it shot past my stop loss. And I'm talking about a tiny trade. I'm talking about a tiny trade that shot past my stop loss, and I took a 60% hit on on a stable coin mean reversion trade because
Were you trading with?
there was nothing in
Were
the
you trading
books.
with? I mean, I don't mean to pry, but like, were you trading with size, or was this a relatively small position?
This was a really, really small position.
Okay.
Really small. Like, you know, like I had my bots set to take a bunch of trades, and so they were all small positions. Like, this was I don't even think it was $1,000.
Yeah. Oh, good. I mean, I'm happy that it wasn't
Yeah,
too bad.
yeah, me too. Thank God it was a small position. And that goes to our previous conversations about managing, you know, mitigating some risk with position sizes. So I was lucky that it
Exactly.
wasn't a big position.
It's actually a
But
good anecdote, and I hope you don't mind if I recycle it a few times. But I often get asked about things like stop losses, and in general, I find them to be very unreliable, or not necessarily that they're unreliable, but you shouldn't count on them, right? If a
right,
stop loss is something that is the prerequisite for your risk management, then you're doing it wrong,
I
right? It's
yeah, go ahead.
yeah, it's it's more like a suggested price.
Right.
You know,
Well,
the price that you set your stop loss at and the price that you might execute at can be very different.
I actually don't use it regularly. I use a trailing stop loss when I'm in profit to protect profits. But on my bot setups, I will put in a pretty deep stop loss just in case, you know, something crazy happens like that. But normally, you know, on my manual trades, I don't do that. I just manage what I'm doing, and I you know, will look for other ways to hedge against it. But no, this was just this was a fluke thing. I mean, I've seen, if you look at Binance US especially, and you look at stable coins, look at USDC versus USD and USDT versus USD, and and you will see some crazy wicks, insane wicks on a stable coin. So stable coins are not stable. Obviously, you know, the US dollar isn't stable either, but it's much more stable than that. There's just, you know, it blows my mind that you could have a loss like that on a so-called stable coin.
It also opens opportunity, though, since we're speaking of trading crypto, right? And I pinned your tweet to the top. I've yet to see a stable coin that's quote unquote stable. This does open opportunities. It's not necessarily the greatest when it, falls far from peg, but for arbitragers, for arbitrage trading, this does open quite an opportunity for them.
Right. Right. And that's why I had that pair open. I've since removed stables from my bot because, you know, normally when that happens, it's not a good. There's nothing good happening in the market when a stable coin comes depegged like that. Um, and I don't even know if that was a market wide event. It was, you know, had a lot to do with the illiquidity on the exchange that I was on that I no longer partake in. So yeah, those opportunities are there for people who like to trade that. That's not something I choose to do on a regular basis.
Well, not even necessarily stables either. Mark, on a previous call, you were, and you can correct me if I'm wrong, but I believe it was the RETH, wrapped stake ETH, WST ETH pair
Yeah.
at, and you were really bullish on trading this pair.
Yeah, exactly. So I'm noticing a pattern with some of these staking, wrapped staking products. And to be clear, I'm not referring to the ones that rebase, but the ones that where the interest rate basically accumulates to the token's value. So things like WST ETH, RETH, and others. When they first get started, their prices are phenomenally volatile, right? You would expect these products to sort of basically match the projected interest rate. But for whatever reason, people are either buying it because they mistake it for some other token, or people selling it because they can't withdraw and they are super bearish on ETH, for example, and they don't really want to hold the token. All kinds of things, right? They're basically futures contracts in disguise. And so they tend to be very, very volatile, like early in their life. But then as they kind of get established, they tend to settle on a certain profile. And because most of these staking services offer like very, very similar interest rates, they tend to move sideways versus each other, but they remain extremely volatile versus each other. So even though they move mostly sideways, it doesn't mean that you're not going to get, like a plus 5% or volatility profile every single day. And yeah, it's a really, really interesting pair to trade because that unless there's a hack or something affecting Leader or Rocket Pool, which I really doubt that there would be, anything that affects those services would have profound implications for the chain, right? Like if you refuse to hold wrapped staked ETH because you think that the protocol might get exploited. If it does get exploited, it affects the entirety of Ethereum, right? So if you're worried about that, you shouldn't be using Ethereum or have any ETH. And so if you want wrapped staked ETH and you want to trade it, trading it versus something like Rocket Pool, which is again like a very large contender to the staking pool, and has been around long enough that I think that they deserve a certain level of respect and trust. Trading these tokens versus each other is very, very predictable. You can even statistically arbitrage them if you wanted to. And so, yeah, it's actually a perfect setup for a protocol like Carbon. You can really just have a look at, what's the average low and the average high of these two tokens versus each other, and just offer to sell one for the other when it gets to that price point. But yeah, if you go back over the last, if you have a look at the weekly charts on these tokens versus each other, they really like their prices are going absolutely nowhere using either one as the numeraire. And so trading the volatility on these things is actually like, I don't know why more people aren't doing it. It's a beautiful way to, I mean, the yields aren't huge. They can be, they could be on Carbon depending on where you're setting your ranges. But yeah, even on AMMs, it actually makes sense to have these things paired up versus each other.
Interesting. And that wrapped ETH trade is still working out for you?
Yeah, I mean, I'm thinking. So I've just been experimenting with it because the price data that you get for these things is not super reliable. So I'm pulling the price data from CoinMarketCap, CoinGecko, and CryptoCompare. So I do have a pretty good aggregation there, but they're still sometimes reporting these enormous wicks, and I suspect that it's because these APIs are using some on-chain data, which includes things like sandwich attacks. So you can sometimes see like a 1000x candle and you think, why? Like, what happened? And it's just because, that user didn't use correct, trading protections. And so they got sandwich attacked, and, the API still reports it as being a price that someone traded. You can also see this on like some blue chips. Like you can, I think CoinGecko actually has a really good like granularity in their data. And you can see like there was a wick down pretty much to zero for the Chainlink token back in like 2018 or something. I can't remember exactly when it was. And I would really like to know the origin of those kinds of things. But it's these kinds of data points that make me sort of skeptical. And so I just kind of, I like to test these strategies out in a real world setting before actually committing size to them. But yeah, the RETH WST strategy is profoundly reliable. It's kind of boring, so you're not gonna catch like a 2x or a 3x wick or something like that, like you might be able to on some other coins. But it's it's reliable. It works really well, and you're giving liquidity to the market for these tokens, which is good.
Well, I think people who are holding out for the big gains right now probably are maybe exposing themselves to unnecessary risk. I think, I'm in the, I'm definitely in sell the rip mode at this point. That's not that's not advice to anybody out there. That's just how I play it. But I'm very conservative on profit taking at this stage in the game until I see some clear.
That's not financial
direction.
advice. It's just stating a fact, right?
Yeah.
Like be profitable is your only objective.
Yeah, be profitable is the real objective, and then the second objective is don't lose your ass. And so, it's difficult right now to find those, to find something that looks like it's got a good risk reward setup and that you're comfortable playing, because it's been so choppy. I think if I did have any advice to pass on for that, it would just be to be patient and don't force it. Right? Don't chase it. Have some conviction in your setups, and until you see something change that makes you think that price isn't going to come to you, then then you might consider scaling your position, into or out of a position based on what you're, depending on what you're doing. But don't chase it, and don't think you're going to catch it if it's running away from you. Wait for it to settle down.
I guess sometimes profitable and don't lose your ass. Boring isn't so bad.
Right.
Right. With kind of strategy that seems to be pretty safe and promising, and you're not gonna, hopefully knock on wood, lose your ass doing it, and you can be profitable. Boring might just be, it's solid strategy at the moment.
Well, if you have any conviction that longer term price is going to go down, listen, this goes both ways. How macro is your macro, right? If you're Michael Saylor MicroStrategy macro lifetime, then any price you buy should be fine, because ultimately, anybody that's playing this game thinks that Bitcoin is, as a long-term play, is going to go up. But for those of us that are traders, who think that price could recede a bit before we get the real leg up to the real bull market, then you want to make sure that you've got capital left for when price goes there. Now, nobody knows exactly where we land. We talked about the 20K. If 25 doesn't hold, we talked about maybe going teens, 15.5, or maybe even 12. There's nothing wrong. It's really hard to pick those absolute bottoms or tops, and there's nothing wrong with scaling your way in. In fact, that's a great strategy. But if you have conviction that you think price is going to go lower than it is right now, before you build position or add to your position, then just make sure that you're preserving some dry powder to be able to do that. And my whole goal through this entire bear market, even though we rallied, was to try and stack more powder to be able to buy when I have some clear signals that we've bottomed out, which I just haven't seen yet.
We have about 4 minutes left. Mark, I'm curious. We have our coffee break on Friday. I think we ran the WST ETH pair, ETH pair on a previous coffee break. But maybe if you are going to be joining us on Friday, you wouldn't mind sharing your screen and running it through the simulator for us. I know that you mentioned Crypto Compare and CoinGecko and CoinMarketCap, and I know that that's where you're pulling from for the simulator. But I want to invite everyone here to join us on Friday in the Bancor Discord, and we can run that simulation again and kind of give them a little bit more visual to what it is that you are seeing.
Yeah, sure. We can run a couple of things. I've even been playing with the idea of, like forward testing kind of things. So, for example, it seems like, Keith and I are in agreement that, we might get a bit of a relief rally from here, but balance of probabilities probably drifting to just north of 20K for a little bit. And it's worth asking the question, how far, what would happen if I set up, a recurring limit order strategy like the one that we have on Carbon to, for example, let's say buy at 20 and then sell again at 26, right? If we're already sitting at a support level here at 26K, then I would expect that if we did break down lower, that 26K is likely to be a new resistance level. And so, if you buy everything at 20K and sell everything at 26K, that's a very easy calculation to make. But of course, with Carbon, we have ranged strategies. And so you could say, start buying, below 23 and down as low as 20. And, how would that affect your return profile if the market plays out in a couple of different directions. So I'm actually thinking what I'll do is I'll prepare a whole bunch of potential scenarios, and we can start playing around with what it what different strategies would look like, and what it looks like to sort of delever a position or lever a position up and that kind of thing. So yeah, if anyone's interested in learning about the simulator and how you can use it to sort of choose price targets and commit to those price targets using Carbon as your trading protocol, then the coffee break is a really great time to do that.
That'd be cool. I'd like to see that.
Keith, I know that you haven't been able to make it the last couple of weeks, but I'm hoping that you'll also be able to join us on a coffee break, because I am looking to get my own subscription to Material Indicators, and I would maybe hope that you might be able to give me a little walkthrough with our listeners on Friday's coffee break also. We kind of refer to them here a lot on this call, but maybe just
I would love to.
a little bit. I would love that. And in the meantime, I'm going to get a subscription to it, but for anybody else that's interested, maybe you can give us a little bit on that.
Yeah, we will. Number one, I appreciate your patience. I wanted to be on the past couple, and I've had some family medical stuff that I was dealing with. Knock on wood, we're moving in the right direction for that, and hopefully, I don't have to spend any more of my Fridays in that situation. But I would love to come on and kind of do a walkthrough and show you how we use that data. Data visualization tool like FireCharge to analyze the order book and the order flow, and we will put together we'll offer a promo offer to the audience.
Oh, that would be amazing. I don't know if I don't think we said it on here, but I think you told me it's like 97% accurate, or these predictions are like 97% accuracy or something like that. And so
that's the MTF mean reversion indicator, the one that the one that I was using when I got screwed by the unstable coin pair. But outside of that, it does have a phenomenal track record, and that trade actually would have righted itself had it not wicked through a 60% rip, to the downside. But yes, we can go through that stuff too. We've got a full suite of stuff that we can over different shows rather than hammer everybody in one episode. If you want, we can roll those out as appropriate. Let you guys decide what you want to do, but happy to share and show you how we use those tools. And for anyone that wants them, we'll put together an offer for all of your listeners.
That is amazing. Thank you so much. With that, we're at the hour. So I guess our take was keep an eye on that 25 still, right? Possibly the 20, and don't lose your ass.
I think the short version is watch out for lower lows,
right?
And don't lose your ass.
Yep. Okay. Well, thank you guys so much. If you'd like to know more about Material Indicators, I've got some tweets pinned to the top. I see them here listening in on our call. Definitely recommend that. Join us on the coffee break Friday. That is at 4 p.m. UTC on the Bancor Discord. You can join the Carbon DeFi Telegram, CarbonDeFi.xyz, and it's the same handle here for the Twitter account as well. So Thank you guys so much for joining us, and thank you to all of our listeners. Hopefully we'll see you all on Friday.
Yeah, awesome. Thanks, Jen. Great job as always. Mark, always good to chat with you. I always enjoy gaining some different perspective.
Thank you, Keith. I appreciate it. Look forward to next week.
All right, talk to you later.